All right. Welcome to the weekly YouTube show. It's the place to be, my friends. If this is your first time joining us, we're glad you're here. We do this every week, Thursday at noon Eastern Standard Time. This week you have me and Scott again. I would dare say last week was one of my favorite shows that we've ever done, Scott. I don't know why. We were on last week. Amazing.
Very much.
And our forecasts now. See, YouTube has a memory. You can go back and look at what we said last week. And I'm going to tell you, we look like freaking prophets is what we look like. Scott's shaking his head because don't put me in that position. Anyway, Chris Burgess is enjoying some time with family traveling as well this week again. So we wish him blessings on his journeys and rest and recovery and an enjoyable time with his family. Let's jump on into it here. Of course, I was looking at SH earlier. I was in an inverse trade on that. In fact, I think it just triggered out on me with a contingency order. I was looking to go into this show, and I didn't want to have to keep riding that trade. So lots of excitement on the Fed report, the FOMC meeting yesterday. I'm sure Scott will have lots of things to talk about there. But I just want to say, because it's not bragging if you can do it, I have to come back to this. We talked about the green box. We said if we bounce in the green box, we are bullish until proven otherwise. We can trade to or within, but not below. To or within, but not below our green box. Let me get my little Big Chief tablet here.
Josh, did you see
Then we said from the other perspective as well, if we come up to this red box, we can trade to or within, but not above that red box. It means that we necessarily had to maintain a bearish perspective, which for those that want to use a fancy technical analysis term, that means we had a range bound or consolidating market. We were making lower highs and it looked like we were making higher lows. So what we were keeping an eye on was this level right here. As soon as we broke through that green box, we were like, game on. The bears are back in town. And we did break through that green box. And of course, last week I was sharing with you guys that I would not be surprised to see us come back down and test these lows. The only thing that I'll add, I do have more things to add, but I want to give Scott a platform here as well. There's a lot of conversation, a lot of buzz, if you will, around. And you look at this, I think maybe a little differently than I do, Scott, but there's a lot of arguments being made that was a wave one, a wave two, a wave three, a wave four, and we're just beginning a fifth wave down from a larger technical analysis perspective. If you look at this with a line chart here, man, I don't know if that helps much at all, but I'll count them this way for you guys. Let's do it with, I will keep it purple. That's a wave one down. That's a wave, it would be a wave three or a second wave down, and we're just getting ready to enter a third wave down, which is not great. However, I think that the third waves, if you study Elliott wave theory at all, which I don't know that Elliott wave crew has their own Elliott wave theory figured out. That's, shot fired, right? But wave threes can get a little bit wonky, especially in a bearish trend. So that's not to say that the bottom's falling out of this thing and that we're going all the way back to prehistoric lows, but definitely my trades have been biased to the bearish side this week, and I'm exiting them right now for reasons I'll expand upon. But Scott, I'll give you a turn at the microphone here and let you share your wisdom with us on the market overview as well.
Do you see everybody's comments? Your sound's super scratchy. Do you know that? Did you see the commentary?
I cannot hear you. Let me see. Can anybody else hear Scott? Is it just on my end?
Can y'all hear me? It's showing it coming through.
It sounds choppy. It sounds like it's mine. I'm going to do something. It may explode the whole internet here. Let me try something. All right, let's try that. Did that improve anything on my end? And Scott, can I hear you?
Yeah, that improved on your end. Can you hear me?
All right. Yeah, and I hear you loud and clear. I'm having trouble with this audio interface. Was it terrible?
Yeah, it was scratchy. Like it was garbled and scratchy. That's why I was chiming in trying to say that. And then you couldn't hear me either. So I was trying to stop you. It's okay. But yeah, you're cleaned up. Yeah, you don't sound like you did.
We'll have a second chance to make a first impression here. All the people on YouTube are like, peace out. We're going on to watch cat videos because that's more entertaining than garbled Josh. Ah, man, we need like a SOS button that we can hit and be like, dude, you sound terrible. I got my phone propped up in front of me. All right, my apologies. So I hate to repeat it, but I will because I don't think you guys could hear it. I'll try to be more brief this time. We talked about this green box ad nauseum last week, and
You're not
I
displaying right
was-
now. You're not showing your screen, Josh.
so many problems. Hold on, let's just start over. We're gonna. All right. Good night. I blame it on myself. I was going to blame it on somebody else, but I blame it on myself. That's the only right thing to do. We need to take responsibility for our actions here. My, oh my. Okay. Last week, and I encourage you to go watch the video from last week. YouTube has a memory. You want to find out who's a stud and who's a dud in the market? Look at the people that are deleting their videos. You'll never see one of our videos deleted. I shouldn't say that. I mean, we may delete them for random purposes, but these trading shows, they're on, all of them are posted. And I'm just here to say Scott and I look like freaking prophets last week. So we were concerned about the bearishness that we saw coming into the market. And what I was looking at in particular was this green box. We said, as long as we're two or within, but not below this green box, we've got to be bullish. But that the same is true on the bearish side. We were analyzing this range right here, which is coming up into this red box. And we said, as long as we're two or within, but not above the red box, then we have to maintain a bearish perspective. And when I was all garbled and you couldn't hear me, I said, there's a fancy term for that in technical analysis, and it's called range bound or consolidating market, if you prefer. On the larger scale, nobody doubts we're making lower highs. We're in a confirmed downtrend in the market, but we were all optimistic in July. We thought, could this be the end? By golly, that line looked amazing, didn't it, Scott? And we were all hopeful that we were going to see retirement accounts go back up. But what we were doing was just consolidating. And now with the new data that we have on the chart, this is the S&P 500, we've of course broke below that green box. So remember, trade two or within, but not below the green box, then we could be bullish, which means since we've done that, we're not bullish right now. Well, Scott's never bullish or bearish. Those are curse words in his world. Correct. But I still trade with the BB gun, the bulls and the bears. You like that? And I go on with my BB gun. And of course, yesterday's Fed meeting, we had a lot of excitement and saw the market sell off again. I don't know, and I'll take a breath here because I've talked now for 8 minutes, only 6 of which you could hear. We may have a little bit of a rest coming up here for some technical reasons that I'll share, but it would not be surprising to see us come all the way on down to that support level or this support level on the S&P 500, and it would not surprise me to break that. There's a lot of reasons why I could draw, and I think Scott looks at this a little differently, and that's okay. We can still be friends. We're practically best friends now. There's a lot of reasons to look at this from a 5-wave perspective and say we could be entering a wave 5 in a dominant downtrend. 1, 2, 3, 4, 5. And if you've studied Elliott wave theory at all, God bless you. I don't know that Elliott Wave knows his own theory, Robert Prechter. But outside of that, if you study wave theory at all, wave 5s can be a form of a wave 3, which are both strong and broad and with good volume. If this indeed pans out to be a true wave 5 down, we could have quite a bit of price movement down to go. Now, I will say in a downtrend, sometimes these 5th waves have a way of petering out and we may just come back down. It would still be considered a 5th wave, even if we made, a similar low, but not a new low and bounce back up. That looks like in hindsight to be a double bottom and then we take off. So I'm not forecasting the bottom is falling. I'm exiting in fact, I just exited right before session, my last bearish trade for the week. And I think there could be an opportunity to reassess going early into next week. So anyway, that's my position, said twice now, Scott. Second time for audio clarity. What say ye? What are you looking at from your perspective here?
Let me I was doing something for everybody. Hang on one second. So There we go. Let's get back to it. So there's no question of what you're looking at. Definitely the opportunities there. I'm going to go back to my really long-term monthly chart, and just have you focus on this for a minute, guys, and some short-term stuff to go with it. We're really struggling at this midpoint. Okay, we've had our 3-wave countdown on the monthly setup right here, and now we're just range bound. And this is the same thing we've talked about on YouTube before. We're continuing to struggle pretty much sitting between this most recent, the June, was it the June low? Something like that. Hang on, I'm not being wrong about this. There's our June low we talked about, YouTube, and then there's this high. Too much arc up against the slope coming down, and now you're trying to fall back on itself, so to speak. You're in this little support test zone. You know, it's, for me, when I step back and look at this, it is, how are we going to handle this zone? Are we going to try to re-challenge a little bit lower? Are we going to really accelerate and just capsize on ourselves on the way down? If we start doing that, then you got to start to wonder if we're really getting into more of a crash scenario. Granted, we are in 2 of the weaker months, September, October, and we know what kind of happens these months. And so that's what keeps resonating through my head. But until we can get out of this range, which is the June low or that more significant high last month, the same thing keeps everybody in Traction Group. We are range bound, the Traction Pro Group. The thing I don't like that Traction Pro has seen from me is I don't like the monthly on the S&P based off of the stuff I teach in there, because it shows that we continue to sit in a downdraft, but that's really long-term analysis. And for the average person that we're dealing with, that's just not going to add a lot of value other than it's keeping a weight on top of the market. I want to shift to one more thing while I've got everybody on this one. Oh, forgive me. Let me just throw us out here in a worst case nightmare scenario. Let's make the assumption the world comes to an end, like something goes drastically wrong. Then wherever this channel is down here at that point, so I'm just gonna give you a rough number, roughly, if that were today, we crash somewhere around the 270s. I know how this sounds before I say it. People think I'm half whatever. I look at charts, right? Yeah. I look at charts and I know this is a valid trend line. It's been validated. This is how I've constructed this. We've talked about actually on YouTube Live how we get to this. Is it possible? The reason I don't, Josh has heard me from this, the reason I don't use bull bear. A sign of a good technician is somebody that if the position of the market changes, then you change with it. Sticking to a bias despite you seeing that things are changing and the lack of willingness to shift is something that's a hallmark that usually gets people in trouble. And I'm fortunate to learn that from somebody off of Wall Street, I don't know, 25 years ago. And it continues to be more and more true. I don't like to get married to my biases because when I do, I usually get in trouble. I want to go, everybody knows me through the Traction Groups has heard me say this, and people know me for 20 years. I love the body surf in the ocean. I spot the wave, I get on the wave, I ride the wave in. Sometimes it dumps me on my head. Sometimes it takes me shoreline, dumps me on my face there. I want to go with the energy. I don't want to fight it. And so if the energy continues to show me something, I'm going to go with that energy until it proves otherwise. I mean, it really is that simple in my mind. And I'm telling everybody, it was not that way starting out for me. So everybody doesn't think, oh, well, you have it. No, it's taken me years to understand that and get that through my head. This is a stripped down version of what they see in the Traction Groups. But I want y'all to see it. I've made the point, there's a green line I don't have on here. We don't need it, but if we cannot get through this gold line right now, it's just a simple barometer right now. I have no, and I don't mean just tick through, I'm saying trade through, follow through. You've come out to another setup here we had. If I can't get through that, nothing changes. Well, I'm still in this channel. Until that changes, nothing changes for me. The purple boxes are all a certain way we set it up. Now I'm gonna shift to one more thing, Josh, and I'll drop back to you. I continuously show you guys the Federal Reserve boxes. This is the Jackson Hole speech. This is the Federal Reserve week right here. I'm going to take that off, but you can see the reflectivity of this and the failure around that level. Okay, now I've gone in, I've marked yesterday's Federal Reserve information on here. If you're trying to sit there and status in your head and everyone wants to follow the big money, well, nobody's bigger than the Federal Reserve. They have the keys to the kingdom. So if you're trying to follow the big boys and girls are doing, just pull this up and do it this way. And I'm talking specifically just the boxes. In fact, just to be fair about this, indulge me 1 second so I'm not messing everybody's head. Take this out and you're left with that. Okay. If I cannot start to recover the Federal Reserve boxes, it's going to be a problem. It also brings up this last little piece I left out. We had an unfilled gap coming back over here. I've deleted it. You still have 3 unfilled gaps overhead and still 1 down here that's not filled. In my dream world, this is what I'd hope we would have done sooner for the market, for people who need the market to go higher, who really are biased that way, was to fill these gaps sooner. We haven't on the downside. Looks like we're working towards it. We'll see what happens from there. This is the 0-point turn back in June we talked about. This is the range high we've talked about. We've talked about this. Until you get out of that range, nothing changes. You are trying to trade left of yourself. The market is trying to move back against its slope, which becomes unsustainable. When we get done with this, then you'll start to see the market try to lift up and out of this for a little while. Last thing I'll say with this, the fact people think buyers have to step in for a market to go higher. I know this is controversial. It's really not, though. You think the market needs buyers to go higher. If the sellers are done with distribution, whoever that may be for some period of time, the market can go stagnant to the right or lift, not just having basic incremental buyers, the most base level. When the seller stops selling, there again, think of an imbalance here. Well, the market has a bunch of buyers. Not so much. We've seen this. Why do you think they talk about on margin call Mondays? Do you think the buyers just stepped up? Maybe, but the selling pressure stopped. These are those little small things. When you're freaked out about your positions, guys, you need to pull back in your head of looking at just some things that are pretty baseline simple. They're not complicated. They may be new to a bunch of you, but they're not complicated. So there's that piece. I know it's a lot to throw in at one time, but this is kind of how I'm looking at things currently. And there are some other metrics I look at that have not rolled yet to say, ooh, get to the long side of it. Stay with the trend. I had one manager in the past couple of days ask me something, and I just told him point blank, if the trend hasn't shifted, and I'll go back to this, if I can't get outside of a channel at any point in history, then you stay with the wave you're on until it proves otherwise. And this is where most traders struggle. They can't stick with the trend. In fact, the data supports that. So if you're in that camp, I'm not knocking on you, but if you are, let's try to break the habit. Trust what you see in your chart. The institution is not moving this stock for the next 20 seconds, whatever it may be that you're trading. If they're in a trend, they're in to move it for a trend for a duration of time, a cycle. So don't lose sight of that. I stress this. I push on a lot with people, and then it just, you're in real money, real time, and it just doesn't really matter. It does matter, because this is how you pick up some of these big movers sometimes. I don't like it trading left over itself. I'm very public about that. When they do, they got to walk them over. They'll have to do the same thing with this or consolidate somehow. It's coming. Just be patient. But if you're short this, you manage your short. If you're trying to get long, pick your places and manage that. But you continue to fight slope. And until you get to find slope, guys, we're going to have a hard time pushing higher until something changes. And so far, it really hasn't, unfortunately, for the people who are in the bull camp. Your bear camp, you're pretty happy right now. Back to you, my friend.
I'm really curious because I keep trying to get my mind around this. And, I mean, of everybody in the stock market, I have the most respect for you. But the gentleman who, was adverse to using bull and bear terminology, like how do they look at the market? Like you, in my opinion, you have to ultimately get to a point where you have a bias that it's going in a direction because you have to pick a direction to trade. So how do they balance not being bullish or bearish, but also not getting stuck in analysis paralysis?
Okay, so think of it like this. If you can remove bull and bear from your vocabulary, guys, and I beg everybody to try this. I know it's not easy. I still phrase it, and I always say with a disclaimer in most of the classes, right? I also say, well, take the price in your P&L off your screen and try that for 30 days. It's brutal for people at first. I'm getting Josh's question. You're either moving to support or to resistance. So do you think you are in a situation where your trend, your cycle is going to move to much deeper support or to higher resistance? So as opposed to red light, green light, I trained all my kids. I joke about this. I could do it in the car if I was with them right now. Red light, stop, green light, go, like just like that. Why? I condition them from the able to talk to be able to do that. Why? So that when they get to one, they'll remember, oh, red light, stop, green light, go. Seems silly, right? It was fun to do in the car. If I take away bullish and bearish, soon as if Josh, you always say we're bullish something, people immediately go by it. It happened with Citigroup. I've had 3 people I know of because I talked about Citigroup's long-term base who've already bought Citigroup. I never said buy Citigroup. I don't give buy sell advice. They're just hoping it will go ahead and work in there early. So as soon as I say that, or you say that, and even, well, you know, Jeff, I mean, Jeff and I went rounds with this. And he said, I finally get it with you. I see it. And I said, and I shrugged my shoulders like, when you really step back from it, it's not that we're not, but if you really think about it, and when I said, it's like an elevator rod. Am I going to go from, I had to go to a hospital this week, deal with something. Everything's fine. But I had to get on the parking deck elevator, whatever it was. And it's like 7 stories. You ever been on an elevator and you want to go from 1 to 7 really quick, but every button's pushed, or there's a bunch of people and you go stop, go. That's like 5 o'clock traffic versus 2 a.m. traffic. There's nobody on the road or it's really congested. Coming back to Josh's point, if you can take it from your vocabulary, you go with the flow. You, like Bruce Lee said, I think it's the quote, be whatever shape you're in, be like water, take the shape of it. Soon as Josh says, I'm bearish, number one, people start looking and say, okay, that means he's short or he has a negative bias towards the market. If you remove it from your vocabulary, once you say something, if you told your wife, hey, I'm taking your favorite restaurant, and you took her to McDonald's and that was not her favorite restaurant, you're in trouble. Okay. That's exactly what happens though when you say you're bearish. You're committed, you've publicly said you're bearish. If it flipped, I know you would come out of a trade, Josh, and this is for everybody. But because we have such a strong association to bull and bear, it permeates through the media. You guys have to defend that somehow, some way, and subconsciously you don't realize it. I used to do this. And once I broke, I was willing to flip like a fulcrum point on a seesaw on a playground, saying, if I'm wrong, let's go the other way. The problem is you're putting such a strong adjective into our society, and we follow that. Now I'm married to it. Well, I can't take the stop now, Scott. Why not? Because I'm bullish. No, you're just going to the next level of support or the next level of resistance. It's a mindset change, Josh. And I mean, even when Jeff will tell you, this was not an easy conversation. Everybody fights me on this, and then they're like, ooh, and they start to like it. It's not easy, but I'm telling you, if anybody wants to adopt this, please do. And then take the price off your chart. I know you got to calculate your price, your stock, but if you're actually technical, you're not trading the physical price unless you're looking for big round numbers. And if you're studying the price and the P&L, you're not paying attention to time. If you're trading R's, you need to stop focusing, because the R is some block of energy. And forgive me for wailing on this, but it all fits together. These little sub-psychology things play into it. Wall Street knows it. They use it against you. How many people on CNBC, Fox Business, Bloomberg, yeah, we're bullish the market right now. We're bearish the market right now. Or the world's coming to an end, according to Ray Dalio. We're going to where the buyers are, or we're going where sellers are. That's all this is. Am I right? Hey, tell me. I mean, do you see why I hammer so hard? I know we joke about it, but it's like the psychology, what happens to retail traders, I'm trying to break you from it because I see it sabotage people. But to answer his bigger question was, how do they handle that? I have an idea in my head that support is a whole lot lower than where it currently is. And therefore, I'm only looking to get to where the buyers are or the sellers are. You now eliminate from your vocabulary 2 words, bullish and bearish, that are very, very self-sabotaging. You don't even know it. So does that help? Sorry, Josh.
Yeah, I'm meditating on it. I wonder, like, so I'm thinking about it from 2 angles. I'm thinking about it from a instructor angle, and I'm really trying to search in my own spirit. I'm trying to consolidate a lot of thoughts I have in my head. I think of bull and bear terms very similarly to support and resistance and supply and demand. Like in my emotional spirit, those all have equal weighting. So it's natural for me to say, we're bullish versus we're bouncing up off from support, like in my mind. But I could see where one is an opinion and one is just a more statement of fact, I guess. It's probably not a big deal other than if you don't have a system and discipline that causes you to flip trades. Yesterday is a great example. So, and this is posted in the Discord channel. You guys can go look at it in real time if you're a TSU member. So yesterday on SPY, I jumped into a bullish trade in the morning for a couple reasons. One of which was stochastic was oversold, which we'll take a look at. Number two is that like the last 3 times they've raised interest rates, the market responded positively, which it did kind of yesterday, like it whiplashed back and forth. And some other reasons that aren't worth going into right now. So I was in long. Unfortunately, I was in lunch with Andrew, our one
screen's
beloved.
not showing, Josh. They're
oh
asking.
yeah, you can't see my screen. Jerk screen. You can see my face though in my beard.
They noted that in the comment.
Yeah. So Andrew, our video Andrew, he and I got together for our like once every 6 months lunch. Great guy. And so like the Fed announcement came out, the market went bonkers. And I didn't have a target set like a dope. I did have the stop set. So I got kicked out of this thing. Just it came down, it went up. I could have exited there, but then it came down and just below, actually just above where that green line is, I had a stop. That was automated. Stops are non-negotiable. And I was looking at it and my analysis lined up and I said, this is actually bearish momentum, looking for, how would you phrase that? I'm looking for the buyers. And so anyway, I flipped the trade, but my system is designed and structured to do that. And I think by nature, ours trading requires that of you. So it's not foreign because I see people do it, but in a way it's foreign to me to think like, why can't you stay agnostic in terms of direction? But
did you see
anyway.
Sorty's question, Josh, about how do you handle neutral versus bullish or bearish? Like in your
neutral
head.
I just say neutral. Like I don't know. So those are 3 words I got very comfortable with. And it's been an interesting progression. When I was prior to TradeSmart in 2009, when I was just by myself trading, I don't know didn't feel good because you felt like you should always know. And then at the inception of TradeSmart, I don't know didn't feel good because you're supposed to know. Like people are coming to you to be the expert. Like of course you have to know. Why are we involved? And then it was probably about 10 years ago, so 3 or 4 years into the TradeSmart experiment, which has turned into this huge thriving thing. I just got comfortable saying, I don't know, because I don't know was less painful than having an opinion and being wrong.
Yep.
So that's how I deal with neutral, either neutral, I'm sideways on it, or I don't know. Like, who knows? Like kind of like where we're at now, although I do have an opinion on where, I have an opinion right now, but well, let's just morph into that, I guess, because I do have an idea. I want to point this out. And this worked really well, by the way. This same setup happened right here. And it's kind of showing up again. So stochastic and I are like, if Scott's my best friend, stochastic is my second best friend. I connect with this way of looking at information really, really well. And maybe you guys find a way that, it's something you connect with really well. Scott has his way he connects with really well. So I love patterns. I think it's the artist within me. I played so many scales and arpeggios as a child and young adult that I just learned patterns. Like patterns are innately in me. And so looking at this pattern, I want to draw, let me do it this way. I think this will be easier. Add a horizontal line. Let's not make it green. Let's make this, just to riff on that thought as well. I think colors could display an emotion. So we could say that we're looking for support, but if we label support green, then that probably would carry more emotion with it than saying, I'm bullish there. Let's make this turquoise. That seems like an emotionless color. All right, so turquoise, just look at stochastic. That's where we're sitting right now. This is where we were. Like I said just a moment ago, here was the setup. I'll put my cursor over that. You see last time stochastic got that oversold. And these are close, but no cigar. Here's another one right here. We're falling like a rock. Like if you were in this, all hell is breaking loose. If you're if you're whatever bullish. Sorry, Scott, I'm gonna have to practice.
Yeah, it's fine.
But stochastic gets so oversold. And I don't want to get into, we teach how stochastic is created. That's, master's degree. We're looking for 101 here right now, but there's just a little pop. And I'm going to get into theory here in just a second. Here's another one, a little pop. Just hovering my cursor over when stochastic gets that oversold. Let's go back in time. Now, stochastic is range bound, unlike MACD. MACD can get more and more oversold. But stochastic is range bound by its nature. There's another one. Here's an actually no, we weren't even that low. What am I doing? I'm hallucinating. Let's go back. We're looking for the teal line. Here's the teal line. Get rid of that. Not a huge pop, but just a little pop up. You take a note of what's going on here. Let's do one more just for fun. Here's one more. That's a big pop. Like that was a whole new direction. 0 out of whatever times that was 6. And you can go do your own exercise, plot your line and go back and look at it. 0 times did it keep running enthusiastically in a downward direction. So here's my hypothesis of the day. I'm a little bit hanky, as one of my dear friends and mentors used to say. I'm a little bit hanky about jumping into new downward trades that make money when the market goes down. I'm just gonna be a jerk. Whatever you want to call those, just name them your own thing. All right. I would not be shorting SPY right now. I did just exit my short on SPY that we entered yesterday afternoon. Now you get into theory. It's probably dangerous to try to trade this to the upside. And you can go see all those examples that we just looked at. I mean, it may be 1 day, it may be 3 days, it may be 6 days. It may be freaking July that took off like a rocket ship and nobody was really expecting. I don't know. We could shoot back up to resistance here. We could shoot beyond resistance, but I live in the world of probabilities. Great question to ask yourself. What is the likelihood that? What is the likelihood that? What is the likelihood that this thing is going to do that? Not very good. What is the likelihood that it's going to do that? Maybe a little bit higher. What is the likelihood that we're going to do that? What happens after that? I don't know. That's a pretty decent likelihood. And what's the likelihood that we're going to do that? Pretty good. This is such a small amount of time that could be 1 day, 2 candles, whatever. To me, that's not worth going and trying to chase. I'm going to let the short sales go on sale, get them at a cheaper rate as the market goes a little higher, and then continue on bearish, go or downward. Go with the flow. An object in motion tends to stay in motion. We're in a defined downtrend right now. And, even short-term wise, just looking at this, there's your lows and there's your highs. So, at whatever fractal you want to look at this on, but you're making a series of lower highs and lower lows within a larger series of lower highs and lower lows. The only brief moment that we had of considering breaking this downtrend was back in July when we broke through that recent high. But then I would actually compare this to back here and say we're still making a series of lower highs and lower lows. So that's kind of my short-term game plan on the overall market. And then we drill down into individual stocks from there. So, if I was going to be doing Power Trader, which I'm not, Alfonso is doing Power Trader this weekend. So be sure to tune into that. But I would be going through and looking for stocks that are already primed to, they're already at their point of resistance. And all we need is a little confirmation and then they're heading lower. And that's what I'd be looking at, considering identifying some trades on.
I always go back to the concept of counter probability, just like you're saying. What are the odds? And this goes back to who you are in here and what cycle time you're trading off of. One thing I want to just come back to for 1 second and I'll get this chart in a minute because it's going to freak some of you out. One of the debates and discussions I've had with my buddies over the years is paper trading versus real trading, Josh. So this kind of dovetails where we just were a little bit on the psychology side of bull and bear. I've had some of my closest friends in the industry say, if it's not real money, it's not gonna. I said, if they don't have an edge, why are they burning up their cash until they understand their edge? And that took a lot of heated debates. And then finally they're like, okay, we surrender, you're right. But once you have a system that you can see you have a qualified edge, even if it's just 2 or 3 shares or one contract to get your feet in the water, guys, if you're newer to trading, it's a great way to get a feel for it, because you can read about riding bicycle all day long. Until you get a bike and ride it, or a horse, you can read all you want, but till you do it, you don't get the feel of it. Just like driving a car when you were 15, getting your permit, 16, getting your license, mom and dad are no longer in the car, and you're by yourself. It's a lot different than when you're 20, 30 years later in life. So, Josh, how do you feel about, real versus, but please feel free to comment before I get to the chart. But it is something that I've seen a lot of debate in the industry over the years, but I don't know what your take is on it from what you've experienced.
Great question. My opinion has changed slightly. I used to be dogmatic that you should risk fake money before placing real trades. And I agree with everything that Scott said. And there is a personality that's out there that will not take fake money seriously.
Yep.
And so the exercise is a moot point.
Yep.
So if you go and give yourself $1 million trading account and you lose 300,000, today, and you go and reset it to $1 million on Monday, that is worthless training. If you can set a trading account at whatever your anticipated entry into the market is, a virtual trading account, trade it diligently as though like this, everything was on the line. And the way I get around this is diving into, I teach a masterclass called the Effective Trading Loop. And part of the Effective Trading Loop is actually a concept of paying yourself for executing correctly, basically rewarding discipline, not successful trades, because it's possible to do the right thing in the stock market and lose money. It's also possible to do the wrong thing in the stock market and make money. And that's a disassociated pair. Typically in life, if you do something wrong, you don't get rewarded for it unless you're a politician. But since that's not the majority of us in here, we get spanked if we do something wrong. You go to the adult penalty box. And so the idea of this effective trading loop is have an escrow account, and there's an algorithm for how you size that, whatever. And, just for round numbers, if you execute your trade system correctly, pay yourself $200, whatever it is, whatever is appropriate for the account level that you're at. Your trading account just goes and goes and goes. It rises, it falls, but the system overall should be proven at that point. And so it's growing in general. And then you exit some money from that. And then you use that to pay yourself so that you reward the correct behavior. And if you do the wrong thing, then you create some pain in your life, like write a check to the political party that you disagree with, or to your ex-spouse, or whatever it is. I had somebody tell me that once. I'm like, that's hilarious. And so just to button that up, you can apply that same strategy while virtual trading. And it actually doesn't take a lot of money in my experience. Even ultra wealthy people care about $100, or $50 even. And that's probably how they got ultra wealthy. So you can have a little stash of cash that you were going to lose anyway as you're learning how to trade your virtual account. And if you followed your system correctly, pay yourself some cash, put some cash in your jeans. All the while you're learning the system, you're testing the system. And as you see your virtual account start growing, great. Now we're going to switch that from virtual to real, but literally nothing changes. You're still paying yourself real cash. So that's kind of my spin on that, and how I've resolved, the issue that if it's not real, it's, if it's free, it's not for me.
I get it. In traction, we talk about, this is what I've taught for 20 years. It's called the quarter jar system. And you have a good jar, bad jar, but you don't get punished. If you have a losing trade, that's not the outcome. And it does 2 things for people. It allows us to see if your system has an edge. If it does, and you're not performing, then it becomes very apparent. Then it's very visual because it's always in front of them. And that way we find out if we have a psychology issue or systems issues or potentially both. So it's a great feedback loop. It's always instantaneous right there. And if they don't want to do quarters, then they can do marbles or pennies, but it can't be dollar bills because it doesn't have that clinkety sound. So I want all those sensory getting touched on. So
in our family, it's called the edification jar. If you disparage your brother or sister, a quarter goes in. You disparage your mother, and you're putting $10 bills in.
That's brutal. So this one's going to mess with everybody. Which chart's correct? Which candlesticks are the correct ones? Somebody guess, the left or the right? Which ones are normal? This is going to mess with people's head. It always does. Somebody guess. Which one's correct? The left or the right?
They should be black and white. Y'all are weirdos with your color candles.
I know. So the one on the left is standard, right? Price is moving higher, right? The one on the right, I've inverted the colors. Now, why have I done this to all of you? Because there's this natural tendency, if something's going higher, people want to buy it. When should you technically buy it? Okay, so think about this. If it's green, we want to get long. Well, if it's green, it's already moved up and it's closing higher. And we're going to use this 3-bar cluster, this 6-bar cluster right through here. We just like this to make it a little easier. We're going to focus on pretty much just this zone right here on both of these for just a second. Because all of you can go do this with pretty much any platform out there. And this messes with your head. So if you really look at the edge of the market, and this has been quantified out, this is not just my opinion of this, okay? So I'm talking about this. We've seen quantitative work done on this. If you are a trend trader, you should only buy pullbacks. We can argue this all day long, but the data overwhelmingly supports. And people are like, well, of course that makes sense. Okay, if you know that, then why are you buying green bars? So technically you should buy a red bar, but red means it's going, I'll use it in air quotes, short. Well, therefore it's going lower. Why would I want to buy that? Well, because it's pulling back. Well, I know it's pulling back. That's why it's red. Okay. Well, if I reverse your brain to say you never ever can buy a red bar, you can only buy green bars, and you reverse image that, what are you thinking now? I'm always looking for green. In an uptrend, I'm looking for red, what? In the downtrend. Right? So it flips. You've got the red, the opposing of it, so to speak, of what it should be is my point. So if it's running,
I'm ahead of my time using black and white bars. Like that's
actually, no, you're like 20 decades behind, but it's okay. We still love you, Josh. I grew up on black and white because I used to get the old books.
You grew up on bar charts, don't lie.
Pretty much did. But it flips with your head, because now all of a sudden you stop looking at, I want to do this. I want to benefit from this, but I want to buy what? I really buy green. So if your brain's wired, I need to buy green, then why not look at it that way? But it messes with people's head when you look at it. It messes with mine. I know what I'm doing with it. But psychologically, I hear all the time, okay, well, it's a good example is just recently. Oh, the market's it's going lower. I should get short. I'm like, where were you on the pullback, on the retracement to against resistance? Why do you want, and I'm not asking anybody to answer this. I'm asking, though, you to ask yourselves, why do you feel the need to chase? Maybe because you don't have a framework that you're stuck in, that you're working from. Think about a pool ball on a pool table. Can it come off the table? I mean, you could knock it off, pick it up, pop it out of it or whatever, something like that. But normally, where does it stay? At football, you can get out of bounds. Pool table, the ball needs to stay on the pool table. And then it ricochets around, right? Or it goes in the pocket. Why is it when you're trying to trade, you don't frame it? You play pool on the table, you hit a certain angle and hope it goes in the pocket. Why are you not framing? I'm asking this for everybody. I'm not asking you to answer it. I'm saying the next trade you take, because more than likely the reason you're chasing is because you don't have a frame. Now going to Josh, you look at Josh's charts. He will show you a chart. Ooh, downslope channel, top of channel. Here's my risk. Here's my reward. He has a frame. You see it all the time. He knows how much. He's a risk manager first. His charts show you that. It means I've seen him post. I've never not seen him show his R unless he's conversational about something and what he's looking from it. He knows what he's getting into before he ever gets into it. So why would any of you not trade that way is beyond me, unless you're the cowboy, the renegade trader, and those are the ones that statistically all blow up and they're gone. I'm saying this after doing this since I was a kid and worked people for 20 years. If you're in that camp, I've never seen a successful trader who shoots in the hip, who survives the market long term.
Mm-hmm.
They might be out there. I just don't personally know them. If you know them, last time I had a manager once say, "Oh yeah, I know this guy. He does really well." I said, "He has a system in his head. He's not telling you what it is."
Yep. That's
So
exactly what I was going to say.
Right.
You guys are going to.
Yep.
You guys are going to meet a friend of mine here. Later, probably next year, Taylor, and he will appear like he's shooting from the hip, but he has a genius system that is in his head and it's just firing at a high RPM. He's a very active day trader, extraordinary trader. So just like Scott said it best, just because it seems like there's not a system doesn't mean there's not a system if they're being successful. I had a thought while you were sharing this, Scott, and this is half question. I'm 90% sure I know the answer to it, but do you remember what the original Japanese traders, how they used to refer to the black and white candles, like what they would call the black versus the white? It the white candles were open and the black candles were closed or full?
Yeah. Almost like light and dark, like the idea of, yes. Yeah,
it's interesting. Like I wonder if in our Americanization of this, because candlesticks tell stories. If you go back and study Steve Nissen's original works on Japanese rice traders and candlesticks and candlestick patterns, they tell stories. And in the Japanese culture, the open candle versus the I think it was full is what the definition was. Somebody will fact check me on this, but it kind of doesn't matter. But I'm wondering, like, I'm thinking that with your analogy of, or not analogy, but your example of making the red and green candles opposite, I wonder if that's how it was originally intended. Like a full candle was seen to have opportunity and the open candles were seen to have, be empty, of their opportunity. I don't know. That's conjecture, but it's an interesting concept.
I'm trying to think back on that, but I really, top of my mind, can't remember. There's something still on my mind as you sit there and said that. I'm racking my brains. We're live doing this, but I can't pull it out of my mind to figure out what the relationship was. But you know what? Hang on, Josh. Let me see if I got one thing. I don't want to leave us out today. The counter ranges, guys, just because of where we're getting back into. We're down there on the diamonds. Okay. This is the institutionally set stuff. So we're getting into these levels, and this is where I'll start watching for divergences. This is the July range, and this is where I'll start watching for divergences. And again, the small caps continue to be the most resilient. The diamonds have really started to unwind more. But the small caps continue to not fall as far as fast. And I don't mean percentage, I'm saying relative to their levels in the charts. Just let that stick in there for a minute, because this is where things get to start getting interesting. On top of that, and then from a planetary standpoint, we're dealing with a key environment today because it's the 22nd. So there's a lot of little things starting to come together, but like I said, I'm going to follow, as they say, the old timers, the old market timers said, the trend's your friend. Follow the trend until the trend changes. And when it changes, go with a new trend. I know that sounds oversimplified, but as adults, if we were to take 100 adults and 100 kids, I'd say ages, 7 to 17 or 18 years old, whatever it is, and adults from, let's round it up a little bit, say 25 to 65. I wouldn't be surprised to see the kids up from the adults for one reason only. Kids don't understand the level of being responsible at a level an adult is, and therefore that tends to impact your trading decisions. You look at money differently when you're a child than when you're an adult, and you have responsibilities, if you will. I'm not saying it's true for everybody, some blanket statement, but I do bring this up because I watch it, and I have a friend of mine said, well, of course, Scott, if you took a room full of first graders, that's not a fair comparison. I don't disagree. It's not a fair comparison. but sometimes we should be more childlike. And that goes back to the trend is your friend. That's what I learned from some of these really brilliant market timers back in the day, many of who've since passed on from this world. If you just focus on the trend, and a lot of people are trying to trade all that noise. I teach what's called signal to noise. A lot of you are trying to trade the noise and you don't see the signal. And it's like the tree versus the forest. And I know this sounds all Zen, kind of whatever you want to call it. But the difference is when you're really in a real trade with real money, everything becomes tunnel vision. Is the P&L. You lose track of everything else that's going on. You don't see the main trend. You're not scaling. You're not trailing. You're not managing the trade. If you're short this market right now from yesterday or somewhere before then, do you have a reason to exit your short? If so, what was the reason? Was it you hit targets or did your system tell you to come out? And if you can't answer that, odds are you don't have a system and you don't have some sort of edge that you trust to guide you in a trend environment. I don't care if you're day trading scalping. I know Sorties, is on tick charts. It doesn't matter who you are in this class or listening to this live or recordings later. I challenge it. I'll be happy, have a conversation, but you'll find that over and over. The traders that survive decades are people who were disciplined or they become disciplined. And it's probably because they weren't and they got serious about it. So there's my PSA, if that helps.
I've built a muscle, and it actually came through entrepreneurship more than anything, and watching other people. I've belonged in some groups with really, really successful dudes and gals, and some groups where people have really struggled. And the people that tend to struggle in entrepreneurship are the ones that don't have any problem telling you why their idea is going to be amazing. I would never invest in somebody that does a great job of telling me why their idea is amazing. I would invest with somebody who says, I have this idea, here's the opportunity I see, but here are the things I'm concerned about. Building that muscle to not look at the shiny penny, but to look at what can go wrong and overcome that so you don't create analysis paralysis is of utmost importance in business, and it's of utmost importance in trading. So we say in entrepreneur circles, it's not the things that you can see that take you out of business, it's the things that you can't see. So a question that you should write on a sticky note, I wish I had look at this, Scott. Sweet little note from my son Zeke.
Oh man, that's awesome.
That was his grocery list for me.
You got to frame that one forever.
Yeah. So put on your sticky note, kind of like that. Oh shoot, what was I gonna put in the sticky note? Oh yeah. What don't I see? What don't I see? And if you ever have the privilege of being in a mastermind apprenticeship group like Traction with Scott, or Earnings Explosion with Alfonso is coming up as well. What a great question to ask before you jump into a trade. What don't I see? The calendar ranges is one. I mean, I've heard Scott teach it 4 times. Do I mark it on my chart? No. Well, mostly because Scott's my friend and I see his chart like once a week. But I'm looking at this. That's another thing. If you've got this uber bearish mindset right here, that's another thing you didn't see, that you're coming right into support from and I'll share my screen because you can't see it. I marked. No, I don't want to share it because I probably didn't mark it as good as Scott did.
That's okay.
But it's such a great question, and you can't see everything. You won't see everything. You won't see everything in business, and you won't see everything in your trade. I guess just to carry out that analogy, there's a lot of similarities in business and entrepreneurship. In fact, Scott's really encouraging me to launch an entrepreneurship course. I'm holding back, scratching that itch because I want to make sure I'm not saying no. I'm just saying January. Like,
look, Q4 is just in a few days here. What's the holdup?
You're the holdup, trying to help all of your students get registered for Traction. It's all your fault. By the way, if y'all do not participate in Traction, what the heck are you doing? It's the greatest thing on the planet for stock market. Where is it going? Entrepreneurship. Yes, there's some people that have $1 million ideas and they'll never do it because all they can see is the risk and the fear. And there's some people that will look at a stock chart and they'll never place a trade because they have risk and fear. So you've got to balance it. So here's the second question. All right. For me, my second question is, where's the shredded coconut? For you, the second question is, after what don't I see? This is actually a series of 3 questions. What's the upside? What's the downside? And can I live with the downside? And here is the glorious blessing to all of you stock traders out there. We don't get this privilege in business, not to the same degree. You can always know what your downside is by using a stop. Are there exceptions? Sure. The market gaps, things go bonkers. There's even ways to help reduce that risk. But you can always know what your exposure is. Like, I think after business, trading the stock market is easy because, you in business, it's, people don't show up in the store and buy or whatever. That's hard. Stock market, all I got to do is figure out my predefined risk threshold, 1%, 2%, 3% of my account, whatever it is, the R value, So there you go. That's a good, we got a few more minutes, but that's a good kind of around the corner. And then I'll let you wrap up, Scott. What don't I see? And what's the upside? What's the downside? And can I live with the downside? It'll change your life.
When I break down charts, well, I think one of the things that annoys some people is I refuse to be committed to something. If I don't like, I'll get this question all the time by the fund managers. Where are we going? I don't know. You tell me when we get there. If the red light's red, when I get to it, I'm going to stop. If it's green, I'm going to continue to go. If it's yellow, I'm going to have to make a decision. I trade in the real time. I see it as it is. I may have my biases, my, ideas in my head of what I think, but ultimately, and I know Sorties just listened to this when we did one of the traction classes, I made the point. I said, Sorties like this, and this. And I said, when we get there, I'll make the decision. Price, I may have a complete perfect frame, but the price will ultimately tell me what's going to happen along with whatever indicators you're using. Yesterday in real time, this is documented in the afternoon session for the traction group. We're somewhere, forgive me, gonna be off on the timing, but I marked this up using the shadows concept. This got nailed, that got nailed. This support level in the buy as I teach it. Again, I don't advocate trade through it, but going into it, the way the concepts taught, this top got caught, that top got caught, that first retrace that I teach using this logic, that's 4 or 5 points. I'm not advocating we should trade through it. My point is I had a frame. I'm not showing it here on YouTube, but I had a frame. It's all documented. We have the PDF coming out, whatever the video. Before this event happens, that's how precision it was. If I have a frame, then I have to make a decision. It's a 5-minute chart, but the same thing's going to hold true from a monthly chart. So when I look at something, going back to what Josh is saying, in my head, I am looking for what could happen. When I marked it, I even marked levels that we hit one on this morning. That's a little white line. I don't know if it was here. I don't remember what time it was. Doesn't matter. Somewhere, no, over here. Maybe it's that one right there. Doesn't matter. That was all forecasted from yesterday. Because I even said in the video, I said, I don't know if we're going this way or this way. So I'm going to mark both the top end and the bottom end, the range of where we could get to. I still have to make a decision at what point I want to participate. But if I have it framed where I can be neutral, the reason that, where are we on Tom? Give me just a couple more minutes on this, Josh, before we get done with this, because I want to show one thing with this. I don't know if everybody understands. I teach the opening range, as part of traction, all that. The reason I teach this concept is a way to utilize it for timing for people. The reason that your pros, floor traders, all these guys who grew up around this, people dismiss it now, they shouldn't, it's extremely valuable, is because it's symmetrical and risk. Notice what I said. I have an opening range, whatever you use for it, I have a symmetrical risk where I can go above or below that. So every day I potentially have the opportunity to trade. The frame I did before the Federal Reserve announcement was not so they could trade it, was they could manage the expectations around it. If I frame it and I have above or below, no matter what my bias is, I have opportunity either side of it. Creates a symmetry. And they love symmetrical risk because that creates opportunity to go trade daily. A lot of people are getting so biased trying to get everything just perfect. Then it comes perfect and you're busy on a phone call, me talking to Josh, I missed my trade. I'm joking. You want things that are going to wash, rinse, repeat. You want to have a business model that gives you opportunities, hopefully every day. If you're an active trader, if you're a swing trader, hopefully a few times a week. If you're an investor, hopefully, maybe something a few times a month, maybe a few times a month, or at least a few times a quarter. It all depends on you and your hold time, but that all depends on you. So that's kind of that. I really appreciate the opportunity to be here today, guys. So I'll leave y'all with that. Josh, your thoughts before we go?
I think with that, we're just rounding the corner here, right at the hour mark. Thank you, Scott, for joining us. Tune in, guys, every Thursday. Also, if you haven't seen, there's a new Deep Sky podcast that's going on. It is spectacular. You can find that on Spotify and all the places that you guys listen to your podcasts. I appreciate each and every one of you. I hope you've used this to put some extra cash in your jeans for this week ahead. Scott, I always love you, brother. I'll give you the last word today.
Thanks, guys. Appreciate y'all. Have a great weekend ahead. See y'all next week. Bye.